What's up, traders? Welcome back. So today we've got a very special trade recap. I decided to bring Ryan in. Some of you guys know him from the previous videos that he's been featured on here on the YouTube channel. Some of you don't. If you don't, check out the links down below. Make sure you follow Ryan because he saved my ass today, and that's what I want to talk about. We're going to go over this EurJpy trade that he and I both did really well on today. But first, I want to set the scene for you. Now, if you're new, do me a favor and make sure you hit the red button below me. Make sure you subscribe so you don't miss any future videos. I'm going to get creative here, bringing more of our traders on, getting Riley more involved to kind of make sure we're still bringing you value, but in a different way than you're seeing anywhere else in the internet. So make sure you're subscribed. I'll ask you for the thumbs up at the end of the video, but let's see if you find some value first. So this morning we came in, I had two pairs that I was really looking at, EurNzd and GBP/NZD. The thing here is normally those pairs are going to move, not all the time, but normally they're going to move together for the most part. But this morning, EurNzd here was very indecisive. There's signals here that show us it could move higher like it did yesterday, right? You see that big push yesterday? Definitely signals there, but at the same time, there's signals showing chop here with that falling TDI. EMA is not really conducive to an uptrend with the 800 EMA on top. So there's a couple of signs there of indecision. Compare that over here to GBP/NZD, where this clearly had a nice short bias. It moved down yesterday, EMAs were in a downtrend, TDI was in the sell zone, so everything here was short bias. Now, with those two in front of me, I ended up actually getting sucked into what you guys have heard me talk about as the twilight zone. I got sucked into the twilight zone this morning on EurNzd, and I was looking like I couldn't stop staring at the screen trying to find a long entry. But then, we'll say thank the trading gods, for Ryan, all he did was popped into the trading chat and he said, hey, I'm looking at EurJpy. And all of a sudden, it was like I got sucked down a black hole, and all of a sudden I came back to my trading desk and I was like, oh, I'm looking at EurNzd and I can't figure out which way it's going. Let me just look over here at EurJpy and see what else is good. So then this morning, let's put the replay. I mean, you guys can see the massive move here that we took advantage of. But let's put the replay on here and I want to break it down again. So now, Ryan, I'm going to let you take it from here. If you want to just kind of catch us up, not to the entry, we'll go into that in a second on the 1 minute chart, but what did you see here on the 15 minute, and explain to everybody how you were using this divergence that we have drawn, because I know there's going to be questions about that. So tell us what you saw.
Yeah. So the first thing I saw was, of course, the solid liquid 50, even though like it's pretty much headed towards the sell zone, pretty much in there already. Even before I was looking at it, it was on its way down, and we're above the 800. So it couldn't be more obvious that if we're going to trade this, it's going to be long, and their parameters are set. It's not, contradicting like EurNzd was contradicting itself with the 800 above it and then trying to buy it. It didn't make sense. As soon as I saw that, I took it right off. I didn't even bother looking at it any further. But when I drew it, yeah, I just went right off of it. I only had 4 pairs on my watch list today. That's
awesome. And here, I know I don't mean to distract you from the 15 minute, but what really looked good here and what kind of sold me on it was the 1 hour chart. Seeing the TDI in the buy zone, seeing us sit on that 21 EMA. How many times have we seen it push off that 21 with a strong candle formation? And you're getting ready for that. You know what I mean?
And that's exactly what I was looking at. Not only the 20, but if you do that to the chart, you can see the price level. No, even further, right there on the last week, I was looking at that price level too as a support. So when you're thinking of textbook price action,
look at that.
That's what I saw, and that in combination with holding the 21s, I mean, perfectly.
Dude, last night it breaks, tries to get below it, it can't. It makes a higher low, gets back above it, makes a higher low. You know what I mean? It's going to now use that as support. It's very logical. So now take us to the 15 minute. Let me give me the idea here on what you were seeing with the divergence present.
Yeah, so first, with the divergence, that was going to be not my first take profit, but this is going to determine my risk to reward ratio to make sure that the trade was going to be worth it. That's why I got pulled off of EURUSD, because the risk to reward ratio wasn't as good as EurJpy was.
I think that it's important that we touch on with that. When you're reading risk reward, and there was a guy that I was just saying on Twitter was talking to us about this trade today. He's saying, oh, a 20 pip take profit isn't that far, or a 30, or even this, like a 40 pip take profit isn't that far. When you look at trading from the perspective of potential reward, you're actually looking at trading the wrong way. It's very amateurish. But if you instead flip that and look at the perspective of risk, what did you have to risk to get those 20 pips? Then you're actually asking the right question and starting to go down the rabbit hole the right way. Because yeah, 20 pips might not seem very far, especially to a pair that moves 80. But if I only have to risk 5 to go get that 20, wouldn't you take that trade if you win 8 out of 10 times, 7 out of 10 times? Absolutely. So it's always about risk versus reward. What was your initial stop loss on this, Ryan? How far was it?
I actually, because I got in fairly early, I initially put I put in first half my position, and then I put it I had the second half later down the line. But so originally it was a pin low, and then right after that, pretty much as soon as I saw that level hold, pretty much when it broke the 200 the second time, I moved it up to that low. But just to be safe, because I was relatively early, not too early to to see if where it was like a gamble if I was going to be wrong or not. I did set it at the pin low just to be a little bit more safer. Didn't want to get wicked out.
No, that makes a lot of sense. Before we go into the 1 minute chart and you explain a little bit about this bullish divergence here that I have drawn, and then I'll explain my entry over here. I know you were in a little bit earlier, like you just said. Yeah. Did you have any hesitation with this trade? Was there anything that you kind of had to, that maybe came into your head and you were like, you know what, let me put that aside. I don't need that right now. I'm staying focused onto my plan. Was there anything like, I would call it trepidation, anything like that?
So the first thing is down draw, which I'm sure everyone can relate to, right? No one likes down draw, and it kind of hurts a little bit. Sure. So what I did was I noticed that there was even more divergence being formed right there on where you have your trend line set. There was more divergence being set right there. No, the second one when it makes the lower low. No,
right in here, right?
Like
where
right
it's falling like that.
Right at 7:15.
Got it. Right in here.
Yeah, there's a little bit more divergence being formed, even though it's pretty
look at that.
Insignificant.
Dude, good call.
But
good call.
Yeah, that's what kept me in. I was like, no, I'm not going to be worried about this. I almost added in actually because I was only in at 0.5% between my two positions.
No, and I think logically, that's a great spot to add in. My thought was, and why I did not take my position there, my first position, was only because I wanted to see the L50 in the buy zone when I took the entry. So I was waiting for that divergence to be set. I liked that the pin low here was respected here. I liked that even you pointed out the divergence over here. What about right in here? Look in that little RSI right there, 2 hits is rising. Here it's falling. So there's even more divergence there, showing support to this zone. 118.50 basically is the price. So then when we pushed above the 800 here on the 1 minute, which is the 15-minute 50 EMA, broke back down below, but we could not make a new lower low past this structure point here, then I'm like, all right, this makes sense. If we're back above the 50, TDI's in the buy zone, I know I can use this higher low as my stop, and then that's where I was in with you. And then we were riding this thing. And then from there, I was like I said, if I had waited a little bit longer, it would have moved without me. It moved 30 minutes later and it was done. So I waited till the very last second almost. And then look at the TDI here, bro. Look at the liquid 50 of how it just holds the buy zone all day. And I don't ever like to be, dude, it's amazing. And I never like to be like, oh, I told you it was going to go ADR, because I don't think anybody makes money being that guy. You know what I mean? It's just not sustainable. But I think it's important to take note of how we had the potential very, very clearly for us to see this go to ADR. So if I put the ADR indicator on, look at where it is right now, literally at that max ADR level from yesterday's movement. So this type of trading, I think, is very important it's important we drive this home. The type of trading where you use significant levels, like the divergence line where I closed most of the trade, and then the ADR level where I know you took some off here as well. So when you use these significant levels and you repeatedly use them as take profit levels, it does lead to a lot of consistency, wouldn't you say? That it comes from that exit signal?
Absolutely, and that was ultimately a couple pips before, but that was my final take profit. Was right at 73, and it took a minute to hit it. Like, it teased me a little bit. It got within a couple pipettes or micro pips, and then it finally smashed it, and it was good. Finally.
And when you reflect back on a trade like this, because some people will see this and they will like envy you and me that can take advantage of a move like this. I know if I was a new trader and I saw this, I'd be like, how do I repeat that? So what do you do now with this winning trade to make sure that you can come in tomorrow or Monday or whenever the day is to stay following the same rules that led to this setup? What do you do with this winner now?
The first thing I'm going to think about and remember is that it's not going to happen every time. It's definitely not. there's been plenty of trades where it goes right to that divergence line and then it kicks right back down and goes even further. At that point, one of the traders in our VIP group, Kareem, he always says that once, before you enter a trade, you're a risk manager. After that, you're a trade manager. That's making sure that you are sizing up properly, you're securing profits, and that at that point, you're making sure that you don't lose money or giving back any profits. And that's what I was here. Right at about 1.5 R, I took some profits off. At almost 3 R, took some more off. And then when it broke the divergence line, took a little bit more, and then let the rest go until it hit 80 R. So I think I managed it well. Of course, moving my stop loss up every single time. And in the future, with more trades like this, you just have to make sure that you are managing it properly so that you don't give back any profits. And again, just realizing that it's not going to happen every single time.
Is there anything that you'll do specifically? Like, will you go do markups on this winner? Will you go journal this winner? What will you do with the trade to carry the good stuff through, and then also make sure you don't allow any negativity, anything bad to seep through? Because I think, like you said, dude, this even had no break of the 8 EMA. Come on, man. That is an unbelievable rip. So now what can you do? Is it just markups? Is it just journaling? What do you think?
No, so you have to reflect on it. And apart from the journaling, what I tell some of the people that, they book coaching calls with me, is that I tell them while they're studying and they're doing their markups, don't just mark them up, but actually write them up. Write down every single little thing. Write down the divergence, write down your process with it, where's the TDI at your time of entry, and how does it play out throughout the trade, if it works or if it doesn't. What happens after that initial time of your entry. Writing down every single detail is going to help you notice things that you wouldn't notice if you hadn't been doing that, rather than just drawing the lines and seeing what happens.
And with those details, you have to be consistent. You know what I mean? It has to be for your system. What's the ADR? Well, check the ADR every day. Whenever you do your journals, make sure you're noting how much space is left on ADR when you take the trade. Check your EMAs. Check your every parameter. You're like a scientist. Riley and her brother make fun of me all the time because they call me the data guy, because I always am. Like I am. I like to ask a lot of questions. I think that makes me a good trader. I ask a lot of questions. I take in a lot of data, and then I'll figure out what makes the most sense, what makes the most reasonable course of action to me once I've consumed a lot of that data. But I wanted to take the conversation a little bit into a different direction here. Do you use anything like the dollar index to help drive the trade on EurJpy? Only because when I'm looking at it here on the 15-minute, if we were to put the replay tool on, like you see the short bias here. The EMAs are short biased 800, right? TDI is in the sell zone. Everything is saying the dollar index is coming lower. So if the dollar index is coming down, euro pairs are going to move up, right? Mm-hmm. Do you use anything like that in your trading?
I do, although I haven't used it in EurJpy. I have used it in USD pairs. Like I think I traded GBP USD maybe like last week, and again it was a D1, so I was looking for the divergence. Mm-hmm. And GBP USD had the exact same thing. It had divergence basically in the opposite direction, which would drive my GBP USD trade. Right. Another thing is that now I don't know what it's called, but one of the other members in our VIP group who does a lot of stocks and options trading, he basically provided me some equations that add up every single, for example, in this case, USD pair, and it plots the average of them. So I'll take a look at that, and I'll take a look at JPY, and I'll see how correlated are these. Because if I see JPY going up, the average in JPY pairs, and if I see the average in Euro pairs going up, that's kind of conflicting, right? Because you would expect, if JPY overall is going up, you would expect it to come down in EurJpy. That's one thing that helps me as well.
Even with all those correlations, though, I feel like ultimately what matters most is the price action in front of our faces. You know what I mean?
Absolutely. That was the first thing that I saw about EurJpy. Coming off of Asia high, Asia low, and then that 21 EMA, and that price level. You can't ignore it. And
you can't. I was just gonna say that. Not only you can't ignore it, but then when you have the take profit there, so it's like the risk is readable, the reward is readable. I can read every parameter of this setup. I can give it a perfect grade, A, B, or C. I know exactly which size that is. Boom. This is done and done. Take profit is set, risk is set. All I got to do is, like you just said, manage the trade. And to carry that forward, that same dollar index trend analysis, carry that over into Bitcoin now. I think if you are looking at this from yesterday's pretty strong movement from 8,800 up over to 9,100, over 9,000, look at it coming into today. I mean, you see that TDI holding above that 50 value. You see the EMAs coming up. To see us up over 9,400 now, it doesn't seem to be that crazy to me. You know what I mean? I think if you're looking at this, I mean, look at the daily, look at these EMAs, look at where price action currently is. This looks like it has a lot of upside potential to me. That's just me.
Go back to the 15 real quick, or the time frame that you just on prior to this.
Yeah, 15.
Look at the RSI rejecting the liquid 50 right there. Not only that, but price actions coming off the 50 EMA. That's pretty much what we were seeing on EurJpy in the 1 minute. It would just hold the 50 all the way, and that's what it's doing right there on the 15 minute. It's holding that 50 EMA and rejecting, even the TDI is rejecting parts of itself to continue in its higher direction.
If you could go back to when you first started trading, would you have started with crypto for any reason when you see huge rips like this? To me, I get scared because it's just as much as it rips to the upside, it can rip to the downside. It's so volatile. What do you think? Just compared to Forex.
I probably wouldn't, because it's, in my opinion, and this is just me, but it's kind of greed-inducing. It induces greed. Especially with, because they move so much, it's easy to get caught in the trap of, this is moving so much, I can only, risk 5% of my account, which, because it moves so much and you need that bigger stop loss, even with maybe like a micro lot or, 0.01, you're still risking a lot of money. And if you're new and you have $100 or $200 account, that's a nice chunk of your account. And
it's
to
very
see
risky.
it just wick you out and can then continue in your direction, I don't think I would. Yeah, you would need a decent sized account. Same thing with trading indices. Just because
it's an emotional roller coaster.
Exactly. Especially when you're dealing with that much size of your account.
Do you think that trading, and to the level that we do it now with such precise systems, like for the EurJpy trade, where, okay, I'm at the 50 EMA, I have my long bias, I know my risk, I know my reward, I know how to read. Do you think that trading in that way systematically is a natural born skill, or is it a skill that anybody can learn? Is it in your DNA, or is it something anybody can do?
That's I think that's a difficult question to answer, because
it is right.
It honestly, it's per one's personality. I'm a systematic person. I like numbers. I like statistics. But some people aren't like that. Now, it's not to say that they can't learn a system or they can't learn to be systematic. But I think you can definitely, 100%, you should be born, most people that are born with it exceed a little bit more. But the ones who aren't, I think they can still learn it. Of course, it's just not entirely them. They're going to be, a bit more emotional about it.
No, absolutely. And then
that gut feeling.
Right, absolutely. And then for anybody that does, I feel like, want to try to learn it, the best thing they can do is try to model success. You know what I mean? If it's not in our DNA, and if it's something where it is personality variant, then it's important to find people that are doing it the right way and get around them. So I hope that today's video educates and motivates everybody not to hit us up and buy the course today. That's not what we ever make these videos for. But I hope it shows you the systematic approach that we take to trading. I hope it shows you the power of community and how Ryan, like I said at the beginning, saved me today, because he helped pull me out of the twilight zone of EurNzd and showed me where our risk reward opportunity was better found on EurJpy. So Ryan, thank you very much, bro. I appreciate the time here. I think everybody's going to find some value. Let us know in the comments, YouTube community and Facebook and Instagram. Let us know if you like these two trader recaps where you can hear his perspective or her perspective, whoever it is, and mine, and we can kind of go back and forth, and maybe we'll make these a little bit more of a regular thing. I like it. I appreciate it, Ryan. Thank you, bro.
Yeah, no, thanks so much for having me on. I definitely appreciate it. I'd love to be on here more.
Dude, absolutely. And everybody, Ryan's links are in the description below. All right?
Yeah.
We'll see you in the next video. Thanks, everybody.
Thank you.